Good morning, traders. It's 8:02 a.m. Chicago time on Tuesday, the 22nd of August, 2023. Thanks for joining me this morning. A quick sound check, please. This is episode number 2521. 2521. I want to remind you, of course, derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's pop on over to the Convergent Trading pre-market summary sheet this morning. Risk on sentiment across the board. The indices are pushing higher. Treasuries kind of flopping around. The Bund is higher, but the U.S. Treasuries are just kind of sitting sideways. Last night we had Zoom reporting. Zoom beat its earnings by 27%, but the rally yesterday was really outstanding. In that it was very strongly led by techs. If you look at the tech index, the XLK, you'll see it was far beyond the comms, consumer staples and healthcare and industrials and transports and everything else, which were relatively flat. Comms were pretty strong. But also, if you look at the breadth yesterday, or for some of you that's called advanced decline, you'll see that breadth finished actually below the mid of the session. And was quite weak. We started a lot higher and then dropped with the fall, and then on the rally there was no breadth following this rally, so it makes it an interesting run up. We had a pretty decent delta yesterday on the push up, but nothing really as outstanding as the distance that the price covered. So it feels like a technical rally, but it's lacking in breadth. We'll see what that means today. It's really important today that we follow through, and we have in the overnight session. We're pulling back quite a bit here, and we'll talk about technicals in a minute. So anyway, Zoom reported 27%. There was an article yesterday that talked about how the Fed is probably willing to accept a slower ride back to the 2% inflation target in the interest of not pushing stocks too far down or pushing the economy too quickly. This is being discussed as a catalyst for that move up, but I'm going to tell you that type of information is likely to come with a lot of breadth, because that impacts everybody, and we're not seeing that. This morning we got BHP. What's going on here? We got actually quite a few big ones. Lowe's, BHP, we had Lowe's beat by about 1% on earnings. We had Medtronic beat by 8%, BJ's Wholesale Club beat by 7%. Macy's beat by 100% at $5.13 billion. So it's pretty big. Baidu beat by 34%. Dick's Sporting Goods missing by 26%. And then we start to get into the $1 billion or less in revenue, quarterly revenue, and I just lose interest very quickly there. After the close, we have Toll Brothers and Urban Outfitters, nothing too substantial. Toll Brothers expected to report $2.81 on revenue of $2.41 billion. Fed's Barkin says the U.S. economy's performance is impressive compared to many other countries, is currently quite strong, and if U.S. has a recession, it would likely to be a less severe one. S&P downgrades 5 U.S. banks mid tough operating conditions. SoftBank-owned chip designer ARM files for blockbuster IPO. Microsoft to sell Activision cloud gaming rights to Ubisoft in bid for UK approval. Northvolt secures $1.2 billion investment for global battery gigafactory build out. And then for the rest of the day, looking at economic figures real quick. What's going on here? I'm going to ignore the ones that aren't movers. This morning, well, the only thing we have here is existing home sales. We're expecting negative 0.5%. Month on month home sales, existing home sales, the figure is 4.15 million. We have Fed's Goolsby and Bowman at 2:30 Eastern, and then we have API crude oil stock change, and then we have some other stuff which I'm not really interested in. Trending is the auction condition in the S&P. We have a multi-distribution trend profile, no consensus at all in the overnight session, which is really interesting coming into today because it sets us off on what looks like a pretty active price discovery. Now remember, we as traders get paid on price movement, right? So we want to see, I did a survey, I think last Friday or something, poll last Friday where it showed something like 75%, or I don't remember, believe they make more money on more volatile days. And I feel that way as well. That would be my vote. And that's because we need price change to happen. And what this profile is indicating in the overnight session is that there's a lot of price discovery, so there's going to be quite a bit of movement. So this is one of those mornings where you really want to pay attention to the open, the quality of the open, the location of the open, the quality of the first opening swing test up and down, and then the break of that opening swing. These are all going to be very important early indicators of what to look for next. The tape also is likely to give us some clues as to who's dominating. So 180,000 contracts traded so far, which is okay, not great. Remember, the mode of volume over the last 252 days is shown on this chart down here. These are the overnight stats, very important. The mode of volume is 260,000. We're well below that, so we're at the lower end of the range. And then the edge of volume is 300,000. The edge of one standard deviation of volume is 300,000, and we're at 180,000. The inventory's long by 44%. Yesterday's was long by about 54%. The range is, again, 38 points, basically. The point of control shifted way higher, 44.30. The point of control now is above our key reference of 44.19, 44.20. This is important for now. Early on, this gets canceled as the RTH session happens because the volume is a lot bigger in the RTH in the overnight session. So we want to keep track of that 44.19 MC point of control coming at us from early June to the present. And we want to see where we are in reference to that because that is our key magnet in this area. Key test area. Okay, so that's that. Those are the that's the overview. We spent 8 minutes on that. Here's the technical side of things. So yesterday, here's what was expected yesterday. This is what I talked about. This is from yesterday's video, as you can see right up here, episode 2520. And yesterday we were at 43.93. And what I talked about yesterday was, hey, pay attention to a retest back into the range. We have a fair amount of support underneath us. I drew this here. We have a fair amount of support. I'm simply going to be looking, if you recall from yesterday's video, I said I'm simply going to be looking for areas to lean on to get long. And what was the target we talked about yesterday? It's on the screen. It's kind of a cheat test pop quiz here. The target we're looking for is 44.19, 19 right here, 19. And so we're looking to get long somewhere. What was interesting yesterday is that there was we had a very clear failure setup short on a scalp that turned into a bit of a runner. But then once it turned and it exceeded 43.90.50, it became an opportunity to look for a long, to lean long, looking for 44.19. So this was yesterday's plan here. Again, you can go through um, the reasons behind it. These are the big picture levels. 44.65 we have is the next key test area. Remember, we're at 44.30 now. 44.65 is only 30 points away. That's well within range. Not really expecting it today. It'd be great if we can get there. But 44.65 has a very weak high that becomes a key target. The next key target up actually is around 44. Well, there'll be the mid-century figure at 44.50. And then there's actually a naked point of control at 44.58 and a swing high at 56. So 56.58, we clear those. 65 becomes a very, very, very strong test probability in the ES. And if we fail, then we're looking at it coming back to 90.75 once again. So downside, I talked about the downside. We looked at the NQ. The NQ, we're looking for 14,900 at least, and it went to 15,013. So way undershot that. The NQ, again, we're looking for it to pop higher as well, and that's what we got. So pretty good outcomes yesterday on the plan. As you can see here, we opened right in that 90-ish area yesterday. We opened at 95, and then we dipped down. We got our settlement done. We got the point of control done, down into 70-ish, 72, and then it pushed back up through 90 and a half, pull back to 90 and a half, and then where does it end up? It ends up at 44.21, giving us our 44.19 target. Just beautiful structure, pretty orderly auction yesterday. Pretty good rotations in my opinion. I'm not saying you should have made money in it, but technically pretty decent rotations, and the way the auction is supposed to proceed is what we got. This morning we're up here at 44.30, and it's the same sort of environment. We're expecting responsive selling on the open. We're looking for a retest again of 44.19. By the way, I get comments all the time. People are like, well, and I've said this before, I know, just a friendly reminder. Folks think that this is some sort of a precision sport. It is not a precision sport. This is hunting with a shotgun. Okay, we're just spraying pellets everywhere. So we're trading in zones. So folks say, well, you know, you targeted settlement, but it went like 14 points through settlement to the downside yesterday. As I was talking through this trade in the Convergent chat room, you know, I talked about settlement being a key target at 84 from 93, I think. And I got a comment that, man, you left a lot on the table. Yeah, because, you know, if it keeps running, great. This is why we scale out. We try to keep a runner, not always, but we try to keep a runner. And it's not meant to be an accurate sport. So if the target's 44.19 as outlined and it went to 21, that doesn't mean that we got it wrong, or it doesn't mean that that we could have done better. It's just the market works in zones. Even though it might have pushed to an area, a technical area that we're looking at, some participants, bigger participants, couldn't care less about a 12-point range. They're willing to execute within a 12-point range, and they treat that like a tick. So the markets are always going to be talked about in zones. Levels are never actually a number. We're always dealing in zones. So unfortunately, it's just everybody's competing for the same prices globally, the entire planet. Anybody that's participating here has a vote through their brokerage account, and it's not supposed to be an accurate thing, right? So missing the NQ target by 113 points or something like that. That doesn't faze me at all. What I'm looking to get is the direction, the entry, the risk adjusted price at the entry, and the direction. That's it. Remember, there are four things we have to get right to get paid. The fifth one being time, which is a given. But the four things are we've got to get the bias correct. We've got to get the risk amount correct. We've got to get the target correct. And what's the fourth one? So we have to get all of those correct to get paid. Any one of those being wrong means we get risked out or we get the direction wrong and so on and so forth. And so there's a lot that goes into it. It's a sloppy type of job. And most of the time you're sitting here bored waiting for your setup. And when it happens, you're looking to get those correct and to ride it for as long as you can. So this morning, the expectation, if all is normal, the expectation is responsive buying. This is why we go through our news expectations and what's potentially got the market's attention through our Convergent Trading P-Market summary sheet. If there's nothing that's likely to drive this thing on the open, we expect responsive selling back into the 19, potentially a gap to settle trade, and a pushback to the overnight stat, and then we're looking for it to squeeze into that swing high of 56.50, the naked point of control 58.50, and then maybe, I'll dash it, maybe a poke of 65.50 up here. So the price map looks something like 36, which we exceeded overnight. Next, we have 56.50, and we have 58.50 as areas that I expect the market to check. I can't, oh my God, this is just terrible writing. 56, 58, 36, 56, 58, 65, 50. And that brings us back to, ladies and gentlemen, the 90 and the 93 are key over underline. If buyers can push through 90, 93, the sellers are going to throw them up. And a lot of the volume that occurred below there is likely to switch out, to shift out. So I'm expecting a responsive push, but if we open and we open directionally, an open drive, then the 65 becomes a short target or a relatively short target, nothing sure in trading, and I have to get aggressive. So I'm trading against collision pullbacks, I'm trading zippers, things like that. I'm more scalp trading to catch the market. Otherwise, I'm looking for structure, so I'm looking for it to pull into yesterday's range, get into potentially the single prints left behind from yesterday at 44, what was that number, 4409-ish, something like that. John single prints are listed at, good man, 4408.75. So I'm looking for a pullback to that 4412 for settlement. 4408.75 is potential areas to get long, and then looking for it to turn, take out the opening swing, and start pushing. So that's the key plan for today. That's the primary scenario. Otherwise, we're looking for it to push higher, take out the overnight high, poke around, and if it falls back in and through, then it's definitely looking for a short for the gap to settle. Definitely looking to fill the single prints at 08.5, and then definitely looking for it to push through the 44.02 quarter overnight low and to recheck this profile from yesterday, which was a multi-distribution. Volume-wise, it was a triple distribution profile. The point of control from yesterday is around 44.13. So I'm looking forward to retest this, but I don't expect it to dig too far. Okay, so that's the key plan for today. I'm going to leave you with that. It's 8:22 already. The NQ really looks very similar. The NQ is relatively stronger. You can see the NQ took its high from 2 days ago yesterday. The NQ is relatively stronger. It's way up here. The NQ has pretty good support right in this zone here, anywhere from the 55.13, which we put in yesterday, all the way down into this 960, 970 area is pretty decent support for long, in my opinion. The NQ is very, very likely to, the overnight session got to this point of control, this MC point of control, but it's very, very likely to push into the 15,275 and start working itself up to 340, 350, something like that. So we'll see. And if the NQ does not get out of the range, if it pulls back into the range and does not get out, starts to impulse down, then we're looking for 830, 835 test, and potentially all the way down to 14,800 where we started yesterday. Okay, good luck. Am I going too fast for you? Give me some feedback. Let me know what you think. Is this, am I going too fast? Are you understanding how the auction works, how these rotations work, why we can have a pretty decently confident prediction of what is likely to happen? There is nothing about what I'm saying that is cast in stone. There's nothing that talks about certainty. You'll notice that I never say should, must, has to, will. I never use those words. I always say most likely, probable, is expected to. Talk about historical probability and stuff, because guess what? As traders, we can only trade probabilities. We are really just rolling the dice every time, looking for odds that are in our favor, put on a trade, define risk, and just let the trade go. It's really important to think that way. And anybody out there that's talking about, oh yeah, it's got to check, it's got to go to 65, I think you lock yourself into a bias and you're just inviting trouble, and it just becomes something you have to defend because you said it. But if you leave it as a probable or likely or potentially, you keep yourself open to look at the other side and to take the other side if the market reverses. Okay, good luck.